builder may offer you closing cost, a lower interest rate, or free upgrades, but which incentive actually saves you the most money? Some incentives can save you thousands of dollars, but others come with conditions that many buyers don't notice until they're already sitting at the closing table. Here's the reality. A builder offering you $20,000 in incentives does not automatically mean you're getting a $20,000 better deal. So today, I'm breaking down 5 builder incentives you need to know before buying a new construction in the Austin area. And I'll explain what questions you should ask before accepting any offer. Hey, what's going on? My name is Allison Carter. I'm a local realtor here in the Austin area. I specialize in helping people relocating to Austin find their perfect new construction home. I work with buyers who are comparing communities, builders, floor plans, and monthly payments. And one of the biggest areas of confusion is builder incentives. The incentives can sound very attractive, but you need to understand what they actually do for your budget. So let's start with the incentive buyers ask about most often, the interest rate buy down. Incentive number 1, interest rate buy downs. A builder may offer to reduce your mortgage interest rate for a certain period of time. That could mean a lower rate during the first year or two, or in some cases, a more permanent rate reduction. This can make your monthly payment feel much more manageable, especially if current interest rates are higher than you expected. But here's what most people don't realize. A temporary buy down is not always the same as getting a permanently lower interest rate. For example, your payment may be reduced during the first year, but then increase later when the incentive ends. So before you get excited about that initial payment, ask, what will my payment be after the incentive ends? Is the rate reduction temporary or permanent? Who is providing the financing? What fees are included? And what happens if I refinance or sell early? You also need to compare the builder's preferred lender with outside lenders. Sometimes the incentive is only available if you use the builder's lender or affiliated title company. That does not automatically make it a bad deal, but you should compare the full loan estimate. I had a client last month who was focused on the lowest starting payment, but when we did the long-term numbers, told a different story. So don't compare only the first payment. Compare the total cost over time you realistically expect to own the home. Incentive number 2, closing cost credits. The second incentive is closing cost assistance. A builder may offer to contribute money towards certain closing expenses. That could include lender fees, title fees, prepaid items, discount points, or other approved costs. For many first-time buyers, this can be extremely helpful because closing costs are separate from down payment. This means you may be able to preserve more for savings, for moving expenses, furniture, emergency reserves, repairs, or future home improvements. But you need to ask exactly what the credit can be used for. Some credits cannot be applied directly to your down payment. Some may be limited to your loan program, and some may only be available if you use the builder's preferred lender. What most online guides won't tell you is that the largest incentive is not always the most valuable one. If you already have enough money for closing costs, a rate reduction may help you more. If your monthly payment is comfortable, but your savings are limited, closing cost assistance may be more useful. The right incentive depends on your financial situation, not just the headline number. Incentive number 3, price reductions. The third incentive is a price reduction. Sometimes a builder reduces the price of a specific home, especially if it is already completed or nearly finished. This is often called an inventory home or quick move-in home. A price reduction can be attractive because it lowers the purchase price and may reduce your monthly payment. It can also affect the amount of cash you need for the down payment. But make sure you understand what is included in that price. A lower priced home may have fewer upgrades. It may be located on a less desirable lot. It may have a smaller backyard, or it may be further from the amenities you originally wanted. So, before accepting the lower price, ask, is this home complete or still under construction? Why was the price reduced? Are there lot premiums? Are the appliances included? Are the design upgrades included? And are there additional HOA, PID, or MUD costs? A discount is only valuable if the home still fits your needs. Otherwise, you may be saving money on the purchase price while compromising the features that mattered most to you. Incentive number 4, free upgrades. This can be especially appealing because upgrades can become expensive very quickly at a design center. but you need to compare the value of the upgrade with the value of other incentives. For example, would you rather have upgraded countertops or would a closing cost credit help you budget more? Would you rather have upgraded flooring or lower interest rate? There is no universal answer. It depends on whether the upgrade is something you would have purchased anyway. And by the way, make sure the word free is being used accurately. Ask whether the upgrade is fully included or whether you still have to pay an upgrade fee, deposit, or difference in the price. Also confirm everything in writing. A verbal conversation in a model home is not enough. The final purchase agreement and addenda should clearly show the incentive, the value, and any conditions attached to it. Incentive number 5, flex cash and inventory incentives. The fifth incentive is what I like to call the flex cash or an inventory home incentive. This is when the builder offers a credit that can potentially be used in different ways, depending on the loan and contract. It may help with closing costs, a rate reduction, upgrades, prepaid expenses, or other approved items. Builders may also offer stronger incentives on the home that are already built or nearly complete. Why? Because they have money tied up in the home and they may want to sell it before building more inventory. This can create a good opportunity for buyers who are flexible about the floor plan, the lot, the design selections, or the move-in date. But there is a trade-off. You may not get to choose every detail of the home. And if you're relocating to Austin, you may need to decide whether the community and location are more important than having complete control over the finishes. So, if you're open to a quick move-in home, ask the builder what incentives are available on a completed or nearly completed home. You may find a better overall value than starting from scratch. Now, here's the most important question to ask. What is the total cost of the incentive over the time I expect to own the home? Don't compare incentives based only on the advertised dollar amounts. Compare your monthly payment, your cash needed at closing, your interest paid over time, the purchase price, the property taxes, the HOA fees, and any PID or MUD cost. A builder may offer a large credit, but the home could still have a higher monthly payment than other property with fewer incentives. This is why I always recommend looking at the full numbers before making a decision. The incentive should support your budget, not distract you from it. If you are finding this helpful, take a second to subscribe. I create Austin relocation guides and new construction videos to help families make confident decisions before they move or buy. And there's a link in the description to book a free, no pressure consultation if you want help comparing builders or communities. And here is your final checklist. Before accepting a builder incentive, ask these 5 questions. Number 1, is the incentive temporary or permanent? Number 2, do I have to use the builder's preferred lender or title company? Number 3, what can the credit actually be used for? Number 4, what will my total monthly payment be after the incentive ends? And number 5, is the best overall deal, or is it simply most attractive headline? Remember, builder incentives can absolutely help you. They may reduce your upfront cost, lower your payment, or help you afford features you originally thought were out of reach. But you need to compare the full deal, not just the free upgrade, not just the low first year payment, and not just the biggest dollar amount in the advertisement. If you're relocating to Austin and considering new construction, take your time and ask questions before signing anything. The right incentive can save you money. The wrong incentive can simply make an expensive home look more affordable than it really is. Don't forget to subscribe for more Austin relocation guides, and I'll see you in the next video.